Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Matt Bartolini, head of SPDR, Spider, America's Research at SSGA, to discuss the significance of recent ETF asset flows. Matt, it's great to see you as always. Welcome back to Trade Talks.
Yeah, great to be here. Thanks for having me.
All right, you got it. And stocks and bonds delivered a negative performance in September. How did ETF flows fare during the month?
Well, I mean, ETF assets were really undeterred. Flows continued to follow the returns that we had seen prior. We'd had over 40 billion of inflows now for 10 consecutive months, and assets continue to move towards records. So investors really undeterred by the market environment, with significantly allocating to equity ETFs as well.
Right. And in addition to equities, are you seeing anything with bond flows we should know about?
Well, that's the thing. I mean, bond flows continue to pile up, and we're likely to hit records in 2021. And that's even though rates are rising and having a negative impact from a return perspective on fixed income ETFs. We've seen within the fixed income ETF structure, though, there has been some movement more to the short duration side of government bonds. Short duration ETFs have taken in over $2 billion last month relative to long duration. But then also we're still seeing significant positioning within tips-based ETFs. It's been 17 consecutive months of more than 1 billion of inflows. So investors are still positioning for an inflation environment that really is not so transitory at all. And then we're also just seeing significant inflows into bank loan ETFs, $8 billion this year. That's more than the last 9 years combined. So that's another tool that investors are wielding to sort of mitigate the impact of rising rates, but still being able to generate a yield, above 3.5% and what inflation expectations are for the next 10 years.
So Matt, according to State Street Research, what's the significance of all these flows that you're seeing in the ETF space?
Well, I think some of it is just, more users are coming to the ETF marketplace to express macroeconomic views, building portfolios with efficient and transparent vehicles in a low-cost manner, but then also selecting different macro exposures, whether it be sectors. I mean, sectors have taken in, have had inflows now for, I think, 11 or 12 consecutive months. And during that period, it's been 90 billion of inflows. So it's not just a, plain beta market exposure implementation vehicle. We're definitely seeing active decisions being made with sectors and sector rotation. So I think it really just speaks towards the maturation of the ETF ecosystem and the diverse client base and the multiple type of investment options and strategies that you can utilize now within the ETF construct.
All right, Matt, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.